help from Just Cashflow to finance your VAT bill. Corporate insolvency numbers are edging up, but there's still a few things holding these rises back. And finally, more businesses looking to put money aside for a rainy day. All of this in the latest Business Finance Bulletin. With many businesses returning to a more normal trading cycle, we're starting to get back into traditional cash flow problems, mainly around paying VAT bills. Now, many businesses are disciplined enough or have positive enough cash flow to be able to put the VAT to one side, so when the VAT quarter ends, the money is there. However, some businesses just can't get into that cycle. Now, of course, the government did help earlier in the year with the VAT deferment scheme, which allowed you for the VAT during the March to June period to defer that. Now, originally payment was due to be made by March 2021, but recently the Chancellor announced that this could now be paid in 12 instalments over that period. So a little bit of help. However, there will be some businesses still suffering from cash flow problems. Well, the alternative cash flow lender, Just Cashflow, has now launched a VAT loan product. So if you are struggling to pay your VAT bill, you can apply to Just Cashflow and they will help pay that quarter's bill. So what are the terms? Well, you can apply from a minimum sum of £10,000. It's repayable either weekly or monthly via direct debit up to a maximum of 3 months to match your VAT period. Rates will start from 1.5% per month. So a really good scheme there if you find that your cash flow hasn't quite recovered. So if you want to know more about this scheme, go along to the Just Cashflow website, which is just-cashflow.com/funding/VAT-loan. Or alternatively, just drop us an email, info@businessloanservices.co.uk. Let's turn our attention now to the number of businesses entering into some form of insolvency arrangements. Well, the Insolvency Service has released stats for a number of businesses that have gone into insolvency arrangements during September 2020. Now, in August 2020, the total number of businesses entering into some form of insolvency arrangement was 784. Now, that has increased in September to 926. So we can see a slight increase in the number of businesses that clearly face financial difficulty. Now, the interesting one to look at is to compare it to September 2019. To say we had 926 businesses entering into insolvency this year. In September 2019, there was 1,513. Now, you would think, well, how come we're facing a contraction, a smaller number of businesses entering into insolvency? Well, of course, there are a number of factors that are holding this back, despite the economy having shrunk by 9% from the start of the COVID crisis. Now, the couple of things that are holding this back. First of all, the courts. There's a lot of operational inefficiencies still with a lag over from the first lockdown in March. So it's still taking them a while to get through the processes. Secondly, the government has further extended the kind of moratorium on statutory demands and certain winding up positions. Previously, that moratorium was to finish at the end of September, but in order to give businesses more breathing space, creditors can no longer issue with demands or certain winding up petitions now until the 31st of December 2020. I can anticipate there's going to be a lot of pent-up demand in January, assuming that that moratorium is not further extended. And the other thing holding the insolvency numbers back, of course, is the level of government support that's been provided and the job furlough scheme, and also more particularly the amount of cash that has been lent to businesses via the business bounce back scheme and CBILS. All of this has kind of artificially boosted businesses' cash flow positions and extended a bit of a lifeline. So we can expect now perhaps numbers will start to increase as the quarters go by. If you are in a position where already you're a little bit concerned about your financial position, please go and take appropriate advice. It's the best thing that you can do in order to preserve your future, because there may be plenty of other options out there for you to take. In the previous bulletin, I featured a report from UK Finance which revealed that businesses were hoarding more cash. The report found that balances on deposits and savings accounts for businesses had increased 20% on the previous year. Now, this kind of shift to more of a savings mindset has been confirmed in a new survey released by Aldermore Bank. They found that 51% of small businesses they spoke to said that they have now changed their savings habits. They realize that they need a cash buffer behind them in order to help ride out the more uneven times. Now, of those surveyed, 38% of them said that they would immediately start saving more money, and only 13% of them said it was going to be less of a priority going forward. Well, of course, there's a difference between kind of intention to save and actually taking action, and 21% of them said that they would immediately start saving more money for a rainy day. Now, which sectors are more positive about savings? Well, it was the business services and healthcare sector, with 47% of businesses in those areas said they intend to save more. Well, of course, this is a good habit, and if you haven't already opened a business savings account, do so. Just get into this habit of putting a little bit aside every month, if your cash flow permits, in order to help you through what may be a bit more challenging 2021. Well, that's it for another bulletin. As ever, I hope you enjoyed watching it, and if you did, please don't forget to give it a like and a share. So that's it. Have a safe, profitable and healthy week, and I look forward to being with you again next time.